This is why I say that HDFC Bank is without a doubt a banking giant in India, and it will continue to be so for a long time in the future as well. Hello everyone. So in this video, we'll be talking about a bank that's the leading private sector bank in the country. A bank that's the biggest bank by market capitalization in India. Which bank are we talking about? This is none other than HDFC Bank, a bank on which I am extremely bullish on. So in this video, I'll be telling you why am I so bullish on this stock, what are the major growth reasons for the HDFC Bank business, what are the financials looking like, what is the impact of the merger of HDFC Bank with HDFC Limited, and most importantly, what could be the future target price for HDFC Bank stock. So if you're an investor in HDFC Bank, or if you're someone who wants to invest here, please watch this video till the very end. I'm going to be telling you in detail about the fundamentals of HDFC Bank and why does HDFC Bank called as a banking giant in India. So without any delay, let's begin. Let us first take a look at HDFC Bank's financials. If you take a look at this chart that shows the revenue growth for HDFC Bank in the past 5 years, you will see that the revenue that the bank is reporting or earning is increasing on a year-on-year basis for the past 5 years. Now understand this. Any bank earns its revenue from the loans that it gives out and the interest that it earns on those loans. Which means that if I as a customer go to the bank to get a loan, I will have to pay an interest on the loan on a monthly or a yearly basis, and that is how the banks earn their revenue. Now try to compare it with the chart that you see on the screen. If the revenue is consistently increasing, it could mean two things. One, either the interest on the loans is consistently increasing, or the total number of loans that the bank is giving out is increasing. Now, interest rates on loans generally do not increase that frequently, so it is safe to assume that the loans that the bank is giving out is consistently increasing, which is why their revenue is also going up. For any bank, the loan is an asset for the bank and comes under the assets section of the balance sheet, which means that higher the loans that the bank gives, more will be the revenue, and the corresponding growth is also visible in the chart for you to see. Similarly, if you take a look at the profit growth for the past 5 years, the trend is very similar. A consistent increase in the 5-year profit chart for HDFC Bank. This again goes to show that the revenue is increasing and the costs are also kept at an optimum level, which is why their profit is also consistently increasing on a year-on-year basis for the past 5 years. Now, for any bank, the make or break deal is the non-performing assets or the NPAs. If you take a look at HDFC Bank NPAs and compare it with all the other banks currently in India, you will find that HDFC Bank has the lowest NPAs across the banking sector, which just goes to show that the loans that they are giving out, the quality of those loans is good enough and not a lot of those loans are turning into NPAs. Now, the problem is that if a loan becomes an NPA, the bank is going to lose out on the principal as well as the interest component of it, which is going to have an impact on their overall income statement. So HDFC Bank is in a position where their revenue is growing consistently because they're giving more and more loans. Those loans are not turning into NPAs, and overall, as a result of all this, their profit is also increasing on a year-on-year basis. This is why I say that HDFC Bank is without a doubt a banking giant in India, and it will continue to be so for a long time in the future as well. Now, if you take a look at this chart that compares HDFC Bank performance with the other leading private sector banks, ICICI Bank, Axis Bank, Kotak Bank, take a look at these numbers. 5-year revenue growth CAGR and 5-year profit growth CAGR, which means what is the average yearly revenue and profit growth for these banks. You will see that HDFC Bank has the highest revenue growth CAGR. across all the banks. In terms of the profit growth as well, HDFC Bank is the second highest here. So overall, HDFC Bank is very, very well positioned in terms of its comparison across all the private sector banks. Over and above these, there are three major reasons as well why I am so bullish on HDFC Bank. Let's find that out in the next segment. The first reason for growth, which in fact was a challenge up until a few years back, is the retail sector loan growth. Up until a few years ago, this loan growth of the retail sector wasn't very high. In fact, on a quarter-on-quarter basis, they were only growing by 5% odd. But recently, from the past couple of quarters, the retail loan book has started to show a very, very good recovery, and HDFC Bank has started to fire in that regard as well. Close to 11 to 15% growth on a quarter-on-quarter basis is what the bank is reported, and hence the retail loan book is also increasing for them. The second reason for growth of HDFC Bank, in my opinion, is a very strong digital capability. HDFC Bank has made a lot of investments to garner the digital banking market share, and it has been successful in that as well to some extent. 18% market share in point of sale terminals, 9% market share in all the debit card spends in India, and a whopping 27% market share across the credit card spends in India. This is the current market share that HDFC Bank commands in the digital banking space, and with the kind of growth, with the kind of investments HDFC Bank is doing in this space, these numbers are only expected to grow up in the future. The third reason is a very strong net interest income growth. Net interest income is the interest earned minus the interest paid. The bank is going to earn the interest from the loans that it gives out and is going to pay interest on the deposits that people have in the bank. So if the net interest income is consistently increasing, this would mean that the interest that the bank is earning is outpacing the growth of the interest that the bank has to pay out, which would again mean that the loans that the bank is giving are consistently increasing on a year-on-year basis, and that is something that we have validated from the revenue chart as well. So these are the three main reasons why I think that HDFC Bank is going to be a very strong performer in the next few years as well. But hang on, we just got to know that HDFC Bank has also announced a merger with HDFC Ltd, which again tilts the balance in HDFC Bank's favor. And let us now find out what could be the benefit that HDFC Bank can get with this merger. Now, HDFC Bank is the largest private sector bank with total loan book of 12.6 lakh crores. HDFC Ltd, on the other hand, is the largest NBFC which is engaged in the housing finance business with total assets under management of 5.2 lakh crores. You combine the loan book of both these players, it becomes a total of 17.8 lakh crores, which is going to be a game changer in my opinion for HDFC Ltd and HDFC Bank. They will have the opportunity to cross-sell their products to a growing customer base, which will then be combined as a result of this merger. For example, if someone has taken a housing loan from HDFC Ltd, HDFC Bank will then have the opportunity to sell across the board different kinds of loans and offerings and products to those customers. Similarly, HDFC Ltd will have access to the customer base of HDFC Ltd and can use that customer base to sell them housing loan products. Overall, what is going to happen as a result of this is that the customer lifetime value of the customers at HDFC Bank or HDFC Ltd is going to go up drastically. In the long term, this will also mean that the gap between these players and their competition is going to widen up, and their competition will have to make additional investments or take care of additional opportunities to reduce this gap. So overall, in a nutshell, I can very clearly say that this is going to be a game changer for HDFC Bank and HDFC Limited. But this merger is expected to take place and get completed in the next 18 months from now. So immediately I don't see any major impact, but this is purely from a long-term point of view that I'm referring to. Alright, these were the overall analysis of HDFC Bank, the details of the merger, and how could HDFC Bank and HDFC Limited. I hope you enjoyed this video, and I hope that the fundamentals of HDFC Bank are now very clear to you. Do subscribe to Finance Lens, and I'll see you the next time.